Everyone is getting hilariously rich off of the MicroStrategy Bitcoin Treasury play, and you are not. You're sitting on your hands, indecisive. But are they the dumb ones? Are you the dumb ones? It's not super clear. Colin and I are going to dissect the Bitcoin Treasury play on this episode of Bitcoin Season 2. Saylor was on the Jordan Peterson podcast recently, Colin. And Jordan Peterson, the progenitor of all good think boys, was convinced of Saylor's brilliance. And
what you're basically talking about is you can sell debt and use it to buy Bitcoin, and the stock price goes up. Meanwhile, the value of the dollar behind the debt goes down. And then they convert the debt into your stock after it's gone up. It's a perpetual motion machine for finance.
Exactly. That's right, Mr. Peterson. You can literally create infinite money. It's a flywheel. Nothing can go wrong. We're going to try to dissect this. Colin and I are both like armchair macro bros. I wouldn't even say that. I'm like, I'm
water boy macro, bro. I'm just carrying water for the guys who can really make sense of this, and then trying to make sure that, I don't mess it up when I talk about it.
But we have to ask ourselves, what do you mean by macro? And what do you mean by economics? And what really is the dollar?
Jordan Peterson then goes on a really misdirected, spiraling analogy spree which leaves the listener with few actionable things to do. But we're going to try to give you, the listener, a couple tools to figure out either how to play this or avoid being played by this. It's very clear that the meta right now, and probably for the foreseeable future, is to do TradFi legacy finance shenanigans to acquire Bitcoin. There's leverage being built in the system. Some companies have full ported into this. We're going to try to, give the case for and the case against, and some hot takes on how this goes. Colin, I'm glad you showed up, and Jordan Peterson finally got off. Mr. Peterson, please come back.
Where's my daughter? Where did she go?
All right. Okay, I'm gonna talk about it. We're not going to bring Andrew Tate into this.
No, my gosh. Okay, but Paul, what are they doing? I guess what's the TLDR?
Yeah, so one of the takes at the beginning of the episode when we were doing intros for this, you mentioned that the buy heard around the world in 2020 when MicroStrategy, now Strategy, formerly MicroStrategy, but when they were MicroStrategy and they were a little known, software and services company, which made its name during the .com boom, funnily enough, as one of the biggest losers of the NASDAQ bubble popping.
One of the biggest pump and dump schemes of all time. It was amazing. Yeah.
They started by buying domain names, right? And they actually do have, a
real business.
They have a real business, right? They generated 111 million in revenue in Q1 from their software and services.
That's pretty good.
And their consulting. Yeah. It's not bad, right? But basically in 2020, Michael Saylor kind of came out of nowhere and started the first Bitcoin Treasury company. Now, I hesitate to say that because miners had been doing this before him for a while. Bitcoin mining companies were the OG Bitcoin Treasury companies. They would issue stock to fund their operations, and they would hoard Bitcoin, and their stock prices. Remember, this is at a time when there were no really other but there were no other investment vehicles for Bitcoin for institutions. Their stocks had a huge premium, or commanded a premium because of that. Michael Saylor did the first Bitcoin buy in 2020. I believe that it was using the convertible note strategy. It could have been stock issuance. He's done a number of financial engineering games to accumulate Bitcoin. But the basic idea is if you're a company that is large enough, you either issue stock on the open market to raise capital, or you issue a convertible note to raise capital to buy Bitcoin. These convertible notes in MicroStrategy's case usually have like a 0 to 1% coupon. That's the interest rate on the note. And then they have a maturity of anywhere from, I think, like 4 years plus out. And the idea here is that the convertible note is structured in such a way to where the stock price will be low enough once it hits maturity that the issuer of the debt can just convert the debt into that note or convert the debt into the stock and then cash in on the difference. So you're trying to, it's this balancing act. You're trying to make the convertible note attractive enough to the issuer to where they can end up making money on it down the road. As my friend Penny Ether said, it's like kind of like a call option. You basically have a certain price for the stock that you can convert the debt into. And then assuming the stock is above that convert price when it comes to maturity, you make money on it. This is, obviously you could probably, listener, if you're thinking about this, you can kind of see where this becomes almost a little bit Ponzi-like in the sense it's not a Ponzi scheme by the traditional sense, but this is all contingent on the stock actually appreciating into the future. Now, the kind of, keep it simple, stupid explanation here is, well, you're using that capital to buy Bitcoin. The underlying business should be worth more the more Bitcoin you accumulate, assuming Bitcoin goes up. Obviously, all of this is contingent on number go up. But Michael Saylor devised this strategy in 2020. It is now starting to catch on. And what's funny is it's the institutional counterpart to a Bitcoin pleb taking 0% interest credit cards out for 12 to 36 months duration and just pushing all of their expenses onto that and then just trying to scoop up and hoard Bitcoin. If you time it right, you look like a genius. You have balls of steel and you did really well. If you took out a 0% interest credit card in November of 2021, you're probably very sad if you were using that to stack Bitcoin, unless you ended up holding it, right? And found ways to pay off the card anyway. But
yeah, and there's also now yield strategies built around this. So it's funny because a lot of people are wondering when's DeFi and crypto gonna get over leveraged. And the funny thing is, just zooming really far out, it feels like that weird leverage and just fluff in the system is coming from all the traditional instruments. But I mean, as I think someone said recently that I heard on a different unrelated Bitcoin podcast, the stock is the product. So it's not like the company itself. Now we are literally selling just the stock of the company, not like a value creation thesis. The stock is the engineering by which you can deliver value to shareholders, which is it has a very late capitalism feeling to it, honestly. Get canceled for that line, but
yeah, you got to be careful. That's commie talk over there, son. Straight to Venezuela for you.
You start like that, they put you in jail. No trial, no nothing. Journalists, we have a special jail for journalists. You're playing music too loud, right to jail, right away. You undercook fish, believe it or not, jail. You overcook chicken, also jail.
I'm fine being the guy who doesn't really follow a lot of this because I'm not really specialized in traditional finance or conventional equities research. I'm fine being the guy who's kind of I don't know, I don't understand it, but liquor, ladies, and leverage. That's those will get you. And this is like a leverage thing, and it's very obvious.
And it makes sense that you don't really follow it for the same reason I think a lot of technically minded or principled Bitcoiners, if I can say that, don't really care about this as much, because this really is kind of, I would say, MicroStrategy was almost Bitcoin's crossing the Rubicon moment, where now it is becoming a financial play for corporations, whereas the original pitch for Bitcoin, at least if not by Satoshi, by some early adopters, was freedom money that is separated from the very inner workings of, the state corporate alliance, right? Satoshi talks about the great financial crisis, and what was that if not, the ratings agencies, which are supposed to be, unbiased and supposed to be guarding people from financial malpractice, kind of working with some of these banks and overrating these junk bonds, leading to the worst financial crisis the U.S. has ever seen since the Great Depression.
Here's a meme from Alex Thorne, the head of research for Galaxy Digital. Basically, a history of whatever like the Ponzi that year was. So we'll have like ICOs, BitMEX leverage, plus token, if you remember.
Some ancient lore here.
Yeah.
The Chinese Ponzi plus token.
Yeah. And now we have 2025 Bitcoin Treasury companies. My view is that this is going to be a very good trade for a while. And this could be the mega trade of like this decade. And we will give the bull case for it. I'll let you kind of try to devil's advocate, explain why this can work, Colin. And then we'll at least ham-fistedly try to explain why it might not work. It might also be good to differentiate between the types of companies who own Bitcoin. We have a Bitcoin Treasuries from bitcointreasuries.net chart pulled up. If you're listening, it's MicroStrategy at the top with most Bitcoin 582,000. But right after that, we have Marathon Digital Holdings, one of the largest miners by hash rate, 49,000. Then we have 21 Jack Mallers and Tether, Riot, Galaxy, CleanSpark, and then Tesla. Tesla's the first company on here, which is not a Bitcoin company, but has taken existing cash and just existing assets and rolled into Bitcoin.
And that was in 2021.
Yeah, they haven't really done much.
I think they trimmed. I thought they sold some of it. Maybe they just trimmed back a little bit.
Yeah,
I think that is a good distinction though, because there's a big difference. Like there are really kind of, I would say, like three main categories, or at least the ones that I'm thinking of that stand out. There's just the pure Bitcoin treasury play company, which Strategy brands itself as now. They have a side business, but in terms of like what you said, the stock is the product at this point. No one's thinking about Strategy. And like the Strategy was not one of the most traded stocks over the past year because of its underlying business.
Yeah.
Tesla was one of the most traded stocks over the last year because of its underlying business.
It had absolutely nothing to do with Bitcoin. In fact, a lot of the Tesla owners probably don't even know Tesla own
Yeah.
Bitcoin.
So Strategy is an example of the Bitcoin treasury play company, just straight up. Tesla is, a established company, one of the most valuable companies in the world. And they're just adopting Bitcoin as a treasury strategy. Like that, all for.
Yeah.
Taking excess cash. Apple should do this. Microsoft should do this. At some point, they probably will. Like they're not going to do what MicroStrategy is doing probably and have their entire balance sheet in Bitcoin. I'll
point out that this is what Michael Saylor initially kind of talked about. He said, I have a company with a lot of cash and cash is bad to own. Couldn't figure out where to put it. I'm going to put it in Bitcoin. That makes a lot of sense.
That's true. And now that you say that, I'm thinking that his original buy in 2020 was just cash finance. Like it was just cash that was on the balance sheet. Yeah. I could be wrong about that. Fact check me if you're listening to this.
Check, whatever.
I'm not an encyclopedia, so apologies for disappointing any listeners.
Okay. But,
and then the third company are Bitcoin miners who really pioneered this strategy, but in a different way. They were never using the same financial engineering tools that MicroStrategy is using up until the last year. Like Bitcoin miners traditionally didn't really they wouldn't issue converts or they wouldn't issue convertible notes. That wasn't a thing that we saw until 2024. Riot and Mara did one. I believe CleanSpark did one as well. And Riot and Mara did one specifically to buy Bitcoin as well as do some other stuff for operations, whereas CleanSpark just did it to expand their general operations. But that's the third category, and one that's honestly been kind of left behind. Ever since the Bitcoin ETFs came out, these Bitcoin miners have seen their beta to Bitcoin start to slip. So they would typically trade really well when Bitcoin was doing well. They would go up in value a lot. And then when Bitcoin was going down, they would just get absolutely pummeled. That beta has been separating. So they're not correlated as much to the price of Bitcoin anymore, which would make sense if they were the primary vehicle for exposure before the ETF. They are no longer, they have a backseat, and they're now also competing with these treasury play companies that are just seen more as pure play or leverage plays on Bitcoin more than the Bitcoin miners at this point.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds You can find him on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like The Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
The field is getting really crowded.
Yeah.
And it's also starting to evolve. Maybe this is a good time, Charlie, to jump into the preferred stock that MicroStrategy has issued for yield.
Yes. Explain this to me because I do not understand how these things work.
Yeah. So MicroStrategy has issued 2 Series A perpetual preferred shares. There's this STRF. I don't know what you like, STRF, and STRK and STRK. And basically what these are not like common stock, which common stock, you have no claim on the company's assets. They do not issue a dividend. These do issue a dividend. So you have this first one, you have STRF. I'm just going to do that because it's fun.
Yeah.
It pays, I believe, a 10% dividend. And then you have STRK, which pays an 8% dividend. And this is where it kind of gets interesting in terms of the play on strategy, because they're kind of tapping every single line they can to just bring in liquidity so that they can dump it into Bitcoin. And I don't know when they issued these. I think it was last year. Are we about a year in? Because it looks like the payout.
Yeah, I think it's been going on for almost a year.
Anyway, so they issued these, and now anyone who holds these preferred A shares or Series A preferred shares gets a dividend, either 8 or 10%. That adds another layer of complexity on this for MicroStrategy, right? Now they have to figure out where they're going to get the liquidity for that. And this is where, some of the arguments against this play start to build, because you already have the argument of, okay, well, what happens if your stock price is not above the convert price when the notes come due? Then you have to sell Bitcoin. And then you're under kind of this pressure of, well, what happens if the Bitcoin price is down and you actually can't cover the debt? Now, I know there's some probably MicroStrategy fanboys in the audience being like, well, if you look at the way that they're structured, Bitcoin would have to go below $10,000 for MicroStrategy to be liquidated. I can't verify that. I see that thrown around a lot.
But look, the thing is, Bitcoin will always eventually create the maximum amount of pain that it can possibly inflict. You can just go to the bank and assume that at some point in the future, Bitcoin's price will take the path of maximum pain for all participants. So yeah, you can assume that, and that's going to happen.
I mean, I hope that means we're not going back down to 10K because of this, but
we can't. We'd have to shut down the podcast.
Yeah, we would. I mean, we would be hucking, beans on the street if that happened.
Exactly.
But all that being said, you already have the first argument that if the convert price isn't attractive, then MicroStrategy has to pay off the debt. Billions of dollars of debt. Their main source of liquidity is their Bitcoin holdings. Their business cash flows, but not that much. I mean, I just told you 111 million. Let me double check that. I have the SEC filing right here. Yeah, 111 million for the first quarter of 2025. Basically the same as 2024 is 115 million. So, you annualize that, you're looking at just over $440 million of annual revenue. That is peanuts compared to the obligations they have. And on the second part, not even talking about the converts, now they have these yield-bearing instruments that they have to get liquidity for. So the only answer is to either issue more stock to cover those dividends, sell Bitcoin to cover those dividends, which Saylor said he doesn't want to do, or issue additional converts to pay back those dividends. The piper needs to get paid eventually on 2 fronts, on the converts and on these dividends. And, they've got about, I think, $10 to $20 billion to pay out in these dividends annually based on the current price. That's not anything to sneeze at. This whole strategy is predicated on Bitcoin's price moving upward and Strategy's price moving upward in response to that. And that's really kind of the primary criticism from guys like Penny Ether. And, I would also be in this camp too. I think it's a convincing argument that this is not like, this is kind of people have made the argument that this is a perpetual motion machine. And at a certain point, you have to ask yourself, if there are no buyers for the stock, and if people kind of clue into the fact of like, why am I paying a premium for this company based on its Bitcoin holdings when I can go out and buy Bitcoin outright, right? A lot of this strategy is kind of predicated on the net asset or the net asset value of the company, or the company trading to net asset value of like one to one. So, assets are worth, $100 billion. Companies trading at $100 billion, right? If it slips below that, things start to break down. And as Penny writes here, eventually BTC yield, that's the amount of Bitcoin per share that the company holds. It's one of the KPIs for these companies. You want to show that you're getting more Bitcoin per share so that you can keep the train rolling. Eventually, BTC yield requires impossible amounts of capital at worsening risk and reward. Net asset value will fail if and when the market catches on. As long as the market doesn't realize they're running into an exponential wall, things carry on. Enjoy it while it lasts. Doesn't matter if it's funded through an at-the-market offering for equity, convertibles, STRK, STRF. That just slightly alters the exponential coefficient, if at all. Exponential quantities of buyers will still need to show up, and exponential quantities of buyers will underperform Bitcoin. Only sensible investment thesis to justify MNAV is to spin out a profitable business correlated to the size of the HODL. That hypothetical business is right now valued at 45 billion or so. He was writing this back in April. So one way out of this is to actually have cash flows that match your Bitcoin holdings. It's going to be really hard for MicroStrategy to have $500 million worth of Bitcoin. All of that to say, this whole thing is predicated on more buyers coming in and more buyers being convinced that paying more for Bitcoin on a net value in terms of what you're buying from the shares is worth it compared to just going out and buying Bitcoin outright. And the thing that makes it worth it is the stock price volatility. But if you don't have that, and that premium might go away, the more corporate strategy companies we see coming in might threaten that, then you have to wonder how long this has to go on for.
Well, and so you have explained how MicroStrategy works, and we don't have time to explain how all the other similar companies like it, but it's similar kind of games of
it's the same thing.
ATMs, convertible debt notes, and we have a few things which could happen here. So maybe strategy, it feels to me very much like a winner take most or a winner take all, and where this really in the hyper attention economy, you might be able to escape having to truly pay the piper if you are the stock which people care about. But now there are over
right, and I think that's where the bull case for strategy comes in.
Yeah,
like they have the first mover advantage. They really pioneered this whole thing. That's why you have people saying, Michael Saylor is a genius. And you know what? History so far has proved that like he did recognize an opportunity and he seized it. And
set the meta, leaned into it with the most conviction of anybody we've seen in it's really since Roger Ver in like such a public capacity.
Been incredibly lucrative so far. But I do just want to reemphasize one more thing from that thing from Penny. One of the vehicles to accumulate capital to buy Bitcoin is issuing new shares. If you're trying to keep increasing or just keep static your Bitcoin per share, that becomes hard as you dilute. You have to then end up finding ways to stack more Bitcoin to make up for the dilution, which is something that we're kind of already seeing.
Yeah, and this becomes PvP. So what I'm saying is this becomes PvP very quickly, because as the market realizes that the game is going to be, it is musical chairs, and if someone survives, it's not going to be everyone. It's definitely met the attention economy to who can be the shelling point for like which stock is not going to be the one that suffers. So again, I feel too much like I'm shoehorning this only into a negative outcome. But the other dimension is like this is the first time that I have seen a meta in a Bitcoin cycle which could extend beyond a single like traditional 4-year cycle, which is historically, if I take the Alex Thorne meme that I posted earlier of ICOs, you had the Terra Luna trade, you had various Ponzi's. Like those all lasted like one cycle and sometimes even shorter. This to me, because you have TradFi games where you have, events 5-10 years in the future, this could be like the music could play a very long time.
That's the question, right? And that's brings me to the next criticism from one and only Nick Carter of Castle Island Ventures, among other things. Just like GBTC back in the day, the entire game now, the whole thing is figuring out how much more Bitcoin these access vehicles will scoop up and when they will blow up and spit it back out again. So maybe you could explain the GBTC trade for people who weren't around for that, because it's actually it's a perfect analog for what we're seeing right now, because GBTC, that trade unwinding was at least part of what blew up the market last cycle.
So back in the day, before we had the luxury of Bitcoin ETFs and direct, like pure play, like TradFi markets to get exposure to Bitcoin, we really just had this thing called Grayscale Bitcoin Trust, which is not an ETF, but it's kind of like it. And they bought some Bitcoin, issued a trust. And as Bitcoin started heating up in 2020, the stock of this trust, shares of this trust, because it only held Bitcoin with a pretty, big annual management fee. The shares of this trust began to increase as a premium to their actual holdings. This was called the GBTC premium, or discount to net assets valued, premium to NAV, similar terms we have today. And this trade was like the macro trade during the 20 to 21 cycle, when at some point, I think the first peak in 21 at like $60,000 Bitcoin, that a lot of the arbitrage that was available to go between the spot price of Bitcoin and Grayscale Bitcoin Trust Premium, a lot of that arb had been closed out. And the funny thing is that there were a lot of like products and things leveraged within the crypto ecosystem, which after that arbitrage had ended, then kind of a lot of their ability to rob Peter to pay Paul ended. And I would argue, and I would say that this premium drove a lot of the speculative activity, which extended even down into like the crazy liquidity farming DeFi protocols, which then eventually blew out your Terra Lunas and your 3ACs, which then led to FTX. Now, grin, those were all, it was going to happen some way. It was going to always happen. It just happened to be driven by this particular path.
100%. And you can see right here on this chart on TradingView, you can see the green hills at the bottom here are when it was trading at a premium to net asset value. It was doing that for, I don't know if this is the inception of the trust in 2019.
The trust goes back to like 17 or 18, I think.
That's what I thought. So, But anyway, regardless, for our purposes, you can see through the last bull market, 2020, 2021, it's trading at a premium. And then like at the first top of the bull market
in early
2021, it goes negative. And then as Bitcoin gets crushed in December and November of 2022, it gets down to almost negative, a 50% discount. I think this is a good analogy for where this trade might be heading in terms of the, systemic risk to Bitcoin and its markets, because this is another form of leverage, just like with the GBTC trade. Because GBTC was used as collateral for lending in the space, and it was used for a number of vehicles to grease, all of these different incestuous, trading products and some of the, like Charlie said, some of the yield farming and DeFi protocols. Essentially, we're seeing a new form of leverage, a much more institutionalized form of leverage now with all the Bitcoin Treasury plays.
I want to poke you on this, because you were saying before we hit record, like this is a type of leverage which we've never really seen before, which is really interesting because we can make some analogies, but this is it's bordering on like the everything leverage, the everything trade almost. It's crazy.
Yeah. And so it really does raise the question, what is the life cycle for something like this? I think a lot of that depends on just general macroeconomic factors. Obviously, as with everything in this industry, it depends on the price of Bitcoin. But now the leverage is obviously, like I just said, much more institutionalized. It's also like spread out in some ways. I mean, it's concentrated in a few, I don't know exactly who holds all of these converts, but you're starting to see this treasury strategy replicated all throughout the world with MetaPlanet in Japan, the Smarter Web Company in the UK. You've got Moon Inc. in Hong Kong as well. You have all of these different plays going on, not to mention the ones going on in the US, like with Strive, which was co-founded by, or is being partly led by Vivek Ramaswamy, the former presidential candidate. You have BTC Inc.'s David Bailey leading Nakamoto Holdings. They're doing a merger with Kindly MD. You have, as always, got to get his hands into anything that's going to make money. You've got Trump's media arm, Trump Media, which owns True Social, announcing that they're trying to raise like $2.5 billion to pour into Bitcoin for a similar strategy. I mean, like, it's almost an inexhaustive list of press releases over the last few months that are of companies trying to replicate this strategy.
Yeah.
And at what point do we look at that and think, is this getting way too crowded? I mean, I think it's already crowded, but how many times can we replicate this before people are like, actually, you know what? I don't know. I don't know.
I'll with the same breath that I say this is so obvious that a lot of this, in fact, maybe all of it does unravel at some point. There is so much money out there in the world. And because we're in this like meta where the stock is the product and like the S&P, the stocks are the economy now practically. This money, there's so much money out there. And maybe it's not Bitcoin, which is a black hole, but maybe the convertible debt note Bitcoin Treasury company is a black hole for the foreseeable future. So like with the same breath that I say, I don't want to be holding any of these in mid 2030. Like maybe this is the meta trade. I remember I'll say the sacrosanct term of like the layer one trade in 2021, like these new blockchains you had. Avalanche and Solana and Terra Luna it be issued, and it was like so obvious that these are all like the meta. There are multiple of them, and now all of those but one has never returned back to its all-time high. So it's very interesting that I see very, very clear analogies to previous crypto hype cycles, and but we're uncharted territory where we could just see this go on for years, which is kind of fun.
And a lot of it's
pretty fun, honestly. It's going to make for a lot of great stories.
It is going to make for a lot of great stories and potentially a lot of pain. We'll see. Just to highlight a few things before we hop off. We've already said, obviously, that a lot of this is predicated on Bitcoin's price going up and also people buying these stocks. If that music stops, then there are not enough chairs in the room for people's asses. But it's also predicated on these institutions being willing to issue these converts and being willing to service or issue the debt that MicroStrategy and some of these other companies take on. And part of the reason why they've been willing to do that so far, obviously there's the argument that they've seen maybe some of these old converts that have already matured since MicroStrategy started this, and the stock price has outperformed expectations. It's a juicy opportunity. But these companies these institutions are basically making money on the volatility for the stock price. So they can kind of make money either way. If they convert the stock and then end up cashing in on the upside, they also are hedging these trades and they're shorting these companies as they're issuing this debt and making money that way. So as long as that incentive is there, you could conceivably see more of these convert deals issued and used to buy Bitcoin. So just not to beat a dead horse, but it really is at this point, to Nick Carter's point, like waiting to see when the music stops with this trade. Because like you said, Charlie, this could go on for the next decade. It could be in a year or two when a lot of these pop. We don't know.
Who knows? One nice thing is that it's a little more... I don't know if this is actually a nice thing. It's more clear which jurisdictions these types of things should be scrutinized in post the fact. And there's a lot better transparency for reporting on these types of things because of the financial system has, as much as we criticize it, the American financial system has developed pretty good transparent balance sheet reporting.
Mm-hmm.
So like, I like that. That is great. Sure thought, back in the day that Bitcoin and open networks would probably dramatically change the transparency of legacy institutions and not those institutions allow more transparency for Bitcoin itself. But that's just me, the old head in me.
You old skunk, you.
Yeah.
Look at you sticking to principles and separating money from state.
Yeah. Well, it was always going to happen. Dear listener, please, don't hold us accountable for our speculation here. We're simply trying to cover an interesting story for you. If you have one of these treasury companies and you want to come talk about it, hit me up in my DMs and maybe we can rip on it. So otherwise, make sure to follow all of Bitcoin Season 2 and Blockspace Media at BTCSZN2, YouTube, RSS, Spotify, Apple, and wherever good podcasts are found. See you all next week.